Hello everyone, it's Fair Value Finder. Welcome back to the channel. Earnings season is upon us. We actually have two stocks that we reviewed coming out with earnings today. So it's time to get an update on how the portfolios are performing. For those of you who don't know about this, every single stock that I review, I give a buy, hold, or sell rating, and then I put them into these portfolios, assuming you purchased one share at the price used in those calculations. So the first video that I came out with on this channel was mid-April, and the price of SPY was 14.21 or 414.21, and as of right now it is 448.69. So SPY is up 8.3% since I started this channel. Now, I've been reviewing stocks every single day, putting them into these portfolios. So there are some that have been in for days, some weeks, and only a few that have been in there for months. So over time, this will build up and really show, but we want a good idea of how things are looking heading into earnings. We see the buys, 13 stocks have been rated buy. They're up 4.8%. Since the last update, the buys have outperformed the sells. Last time, these were negative. They've been doing great recently. The sells were pretty positive, and they've been on the decline. So we're seeing exactly what we expect to be seeing based on the fundamentals of these companies, which is nice to see. The holds are a mixture of things. It could be overvalued, but the fundamentals, they're not bad. So the market might just be rallying behind the stock, and it could continue going. Or it could be that it didn't meet the quality standards. It could be undervalued and just not up to par. The share count could be growing, or the ROE might be too low. And I wouldn't exactly sell out of them if I were owning them, but I'd keep an eye on it. So let's click into the buys. We're going to make this a quick update. We're going to look at who's performing the best, who's performing the worst, and see why. So we can sort this by the total gain of the holdings. I mean, according to this, it's been underperforming the market. It's moving in line with the market. A lot of these things have been added more recently, so not to be expected. It'll take more time. But Yahoo Finance, where I do all of this, kind of agrees with us. They say 6 of these holdings are undervalued, 2 are near fair value, and 4 are overvalued. So they agree that this is more undervalued stocks. Very diverse, pretty heavy in industrials, but a lot of representation from different sectors. So our worst performer here is Realty Income at negative 0.8%. So if it's less than 1%, that's nothing. That's not bad. Down 50 cents. This one's a monthly dividend stock. It's great. There's some worry about real estate, so I understand it. That's probably why Vici is down as well. It might just pose a better buying opportunity. The best performer is EPSN. I came out with that video on the value stock that I was going to buy heavy into, and this was it. And I am up 17% on those shares that I bought. So we can see that quite a few of these are up a lot. Tyson is up 10%, GGG is up 11%, EPSN is up 17%. We can take a quick scan through the news. Look at this. Kroger, potentially undervalued, 91%. And there was another one that I had seen. SWN, potentially 50% undervalued. So we look through these fundamentals. You can go watch the videos on them and see why they're on this buy list. But these stocks look very good, and I am pleased with the performance that we've seen so far. But now we can go look at one of the other portfolios. Let's take a look at the sells, because that'd be the opposite. That'd be they're overvalued and the fundamentals really don't support that, or they're just on the decline and it'd be time to take your gains or losses and start looking elsewhere. For example, AT&T, heavy in debt, declining in revenues and everything else. It's no wonder that they're down almost 14%. I had lost some money on AT&T in the past, and I know the pain. That's what I'm trying to save you guys from. Leggett & Platt, I'm happy I sold out of that one too. AMD, that was one of the early videos where I wasn't even doing a discounted cash flow. I was strictly looking at value. This is more of a momentum stock. Maybe these next earnings, it'll change to a different portfolio, and we'll just have to put down that there was a $31 loss on this portfolio. But clearly, it's not the type of stock that we'd be looking for value. The market really seems to rally behind it. Texas Instruments, I think it's just catching that AI and microchip rally. So this is likely a short-term thing. Based on the fundamentals, it was overvalued. I personally sold out. I'm happy that I did because I could free up money for other opportunities, such as the EPSN that's up 17%. That's where I put that money into. So I'm very happy that I did so. And now we can take a look at the holds. So for the holds, we have a lot of stocks because it's hard to get stocks that fit the criteria that we're looking for. Quality companies and undervalued. A lot of the time, if they're quality companies, the market's already aware of that and bidding up the price. So our worst performer here is GNE. Honestly, I need to go back and watch the video on why it was on the hold list. I believe that it was meeting criteria but not undervalued. So that would explain the decline where it's moving back towards its fair value. AbbVie is down 10% or 9.5%. I'm interested in looking into the earnings on that one to see what's going on there. Has it fallen enough? Delta Airlines actually has earnings today, which is interesting. They're up almost 15%. So with them, I said they're definitely undervalued. They're definitely on the trend back up to their fair value, but they do not meet the quality consistency standards, and it's a risky sector. So, I mean, I was sure that they were going to go up and be profitable for someone who bought shares, but it wasn't a risk that I was willing to make. The margin of safety was not wide enough to go deep in on that bet. NVIDIA's just gone absolutely insane. The market, it's loving it. Almost anyone who takes a look at the stock sees that it's madness and not worth anywhere near the price that it's trading at. So the earnings will be very interesting when they miss that target that they set out because they had no plan. They just threw out a number. They will crash down hard. I wouldn't be surprised if come a few months, this will be back in the 300s. And Microsoft is just an incredible company. It was overvalued. The fundamentals said there's no reason to sell out of it, and it just keeps running. And then the watch list. This is actually outperforming everything, and these are stocks that meet the quality criteria, and I just need to look into them. So I added them to this list at the price at which I found them at, and I'm interested to see how everything is going with these. So total gain, yeah, GRBK, Green Brick Partners has just been killing it since day one. Within a week of me finding them, putting them on a watch list to dive deeper into because I really liked what I was seeing, they were already up like 20%. So I definitely missed out on that. And that's usually my regret is I find stuff and I don't buy enough of it. Like usually my analysis is correct. I just need to truly trust it. DHIL up 2%. So most of this it's almost all coming from GRBK. But look at that graph and how well it's outperforming the markets. Yahoo Finance says all three are undervalued. So that's a quick look at how everything is doing. Earnings season I go through all of the numbers that they're coming out with, update the spreadsheets to see what's going on. Are they on trend for this year? Do we need to adjust something for this year, next year, and any time moving forward? And what are they saying about the outlook for their company? But please subscribe so you can keep up to date with all of these. If there's any stocks on these lists you have questions about, go watch the video. Let me know down in the comments. I'd love to chat about them. And I will catch you guys next time.